Yes, sir.
Okay. Okay. Will you be using any slides which you would like to show?
I can talk without the slide also, but I think slide will be structured. So I will use the
W-
slides.
Would you prefer to use the slides? Then you can just test it out.
Okay, just a second. Can you see my screen now?
Yeah.
Okay. So it's all fine, it seems. Yeah.
Yeah, absolutely. And how are you otherwise, Mr. Saha? How are in your new venture?
Yeah, so it's a new journey actually. So things are taking shape now. So we got a team of around 15 people, and some very industry seniors have also supporting us. Like for example, the founder of National Stock Exchange. Like for example, the erstwhile head of HR in Colgate Palmolive. So there are a good number of people. Like for example, Bhaskar Das, who was Times of India branding head. So all people are joining, and the main product is basically market prediction. We are using artificial intelligence, quant models, and other things. Then we'll possibly diversify into agriculture and few other areas, like for example, social media scanners and other things. So three products we have envisaged as of now.
In agriculture, what do you have in mind? What do you have in mind?
To cut a long story short, it is this your agriculture weather predictions are taking shape across the world now. So a lot of climate data are easily available now. Using those climate data, weather predictions, like for example, this Yas or just whatever has hit West Bengal, if you can tell the farmers that what they should do 5 days, 4 days in advance, it can bring a lot of value to the ecosystem. Second, using the similar technology, you can also predict crops, harvest, your soil condition, and other things. So those are very standard models available to people now.
Hmm. Hmm. I think after listening to you, Mr. Saha, I am tempted to, overstep my jurisdiction just now because I'm supposed to be only a listener. And, in analytics and, predictive analytics and all, we would like to invite you later at some other future point in time to talk to us specifically on this modeling, which you are, I mean, not which is obviously something which is a secret and which is a part of your proprietary rights,
Yes,
but
sir.
in general about about the conceptualization of how you do these things from the point of view of educating students. That's
Uh-huh.
all. Yeah, yeah.
And we also look for good talents, people who are interested in modeling, econometric, pattern-driven identification, machine learning,
Yeah,
NLP. So we are deploying all these things now.
yeah. That is great. It is great to hear. Great to hear this.
Several times I have talked to Molika also regarding this matter. I have sent a lot of CV to him actually. This
So,
thing
Hardo,
also.
did you hear that?
Yes, sir.
Huh?
Yes, sir.
Yeah. You see, perhaps after talking to you and Professor Anupam, we will organize a talk like this later on. You know?
Yes, sir.
Yeah,
Yes, sir.
yeah,
Actually, this is somewhere both finance and business analytics mixes together and comes up with something.
Yeah, yeah. No, just for the benefit of students only.
Yeah,
Benefit
that's
of students.
definitely.
Yeah.
That is the main purpose our to organize such a, this type of things to only the benefits our students.
I would just like to mention to Mr. Saha
Hmm.
that last time we could not provide you any students with background in machine learning and so on, because we were late. And, the placement department on the engineering side did not want to provide students who they were not very sure about, you know. So this time, if you could come a little earlier, visit our campus, particularly on the engineering placement department side, sometime in the month of September,
Okay.
not later than September. Uh, Before, all the good people are picked up already by the big four, the big four, which is led by, TCS. So before they visit, if you can just put in your calling card with the placement department in engineering, and, and say what kind of students you are looking for, graduating students, possibly they may be able to organize, interaction with you for people who are interested in this line of work.
In fact, we are
Sir,
recruiting
can
now.
I pitch in a bit?
Yeah, yeah.
Yeah, actually, since like for MBA as well, there are some students who have taken business analytics. We teach data analytics, R, Python, and some bits and pieces of machine learning over here as well. So not only for the BTech, so will the MBA students will also be eligible for the same?
I told you, Sohardo, I have already the 7 CV. I have sent it to Arindam. He knows it. I talk you later after the event.
Okay,
Okay.
okay.
I told you all those things, what they have required, everything. Okay. Already your in your domain, I have already take the 7 CV to send it to Arindam company, the Dr. Shah's company. Okay. I'll talk you later. Sure though.
Oh, okay,
Okay.
sir, not an issue.
Okay. Okay.
So this organization, Professor Banerjee, is by me, and we got an Irish investment from Ireland, and we got ISI Indian Statistical Institute as partner. And now yesterday, I have very good development. Dr. Shorish Dasgupta, who is from Wilcoxin, US, he is joining us as a AI mastermind. So
Okay.
a lot
Okay.
happening there.
Acha. What is the association with ISI exactly?
So we are requiring some statistical techniques which are very latest. One of the professor is my partner also. So in that connection, as well as I studied one course in ISI long back. So from that connection, I'm trying to explore certain latest research articles, journal papers which ISI published
Mm, mm,
or they have patented. Some
mm,
statistical modeling that way.
mm, mm,
Specific to
mm,
the area of time series, big
mm.
data, and all that.
Do you use a lot of Bayesian statistics in your work?
Yes, stochastic, Bayesian, both.
Okay.
Because
Okay.
regression models, without them, I mean, there is a foundation of any regression model.
Mm, mm. Okay. I uh, I will just let me sound out one of was we had a speaker, a very excellent speaker, some time back in a conference.
Hmm.
Uh, mm, uh, he's from UCLA, University of California, Los Angeles.
Hmm.
Mm, Sudipto Banerjee. Uh, mm, uh, I will just sound him that can you give me a little background note about your venture, what it is doing, and all. And you may like to, again, since you are trying to tap talent and tap people from different institutions, you could approach him also. You could approach him.
We are place agnostic nowadays. People can work from wherever, but because it's a startup, initial few days we are requesting all the new joinees to be in the office so that we can talk to each other and move fast. Post things sorted out at interpersonal level, then people can disperse and work from wherever.
Hmm.
Should we start
So
or
yeah, you're saying something, Mrs.
no?
Saha?
Should we start at 6:30
Yeah,
sharp?
yeah, we'll start sharply. How many people we have now by now?
Sir, 80.
Hmm? Okay.
See,
Okay, around 80 people. Okay, you give it one more minute, and then we can start at sharp 6:30. You start.
Yeah.
So Goto, let Professor Anupam know also. Can you just remind him?
Yes, sir. I just call him. Okay. Just a minute.
So Goto, you can tell your coordinator for the event today to start at 6:30. You know, he or
Yes,
she can
yes.
start. Yeah.
Yes, yes. Sir, I just talked to principal sir. Actually, there is some work, so that reason he doesn't join today. Okay, and just told him to you just continue these things, and just a minute, sir. Yes, Rahul. Rahul, can you hear me?
Yes, sir.
Yeah. Now you start. Okay.
Anamika, please start the Anamika. Hello.
Yeah,
Please
Yeah.
switch on your camera, please.
yes, sir.
Anamika, please. Yes.
Okay. Should I start, sir?
Yes, please.
Thank you, sir. A very good evening to one and all. It gives me immense pleasure and warmth to welcome your presence in this evening full of knowledge. I am Anamika, representing First Year Finance Club with my co-host Suman Das. It is an honor to be here and welcome some of the great personalities around us. Professor Pradipta Banerjee, Professor Swagato Ghosh, respected teachers, staffs, and my fellow mates. And a very special welcome to our guest of the evening, Dr. Arindam Shaha, Managing Director and co-founder at Vista Intelligence Private Limited. Please give a huge round of applause for them. We are gathered here in our expert lecture program, and the topic of lecture for today's seminar is why stock market is soaring despite pandemic. The topic was chosen keeping in mind the interest of all. Investment in the stock market is not easy. We all know this. There are high risks involved. And in this pandemic, when economies are suffering, millions are unemployed, struggling for bread, stock markets are rising high. At present, it is one of the platforms to earn inflation-based returns. That is why knowledge about stock market and investing in it is a must. Now I think now I am giving a heartfelt gratitude to all present here and taking a keen part in this vital program. And I ensure that this evening and this seminar will be fruitful for all. Now my friend Suman will take this event further. Hello, Suman. Suman, are you there?
Yes.
Yeah, over to you. Please continue.
Thank you, Anamika. Good evening, everyone, and a warm welcome in today's virtual expert lecture series.
titled Why Stock Markets Are Rising Despite the Pandemic, conducted by Finance Club. Now I am Shumon Dash, a student of IEM Management Department, and on behalf of my team, I would like to thank today's chief guest, Dr. Odinam Shah sir, the Managing Director and co-founder of Vista Intelligence Private Limited, our all faculty members for their help and support, and all the participants for attending this session. Now, I would like to request Professor Pradip Banerjee sir to say something about this. Sir, you are not audible, sir. You are muted.
Yeah, I unmuted my mic. Well, I'm sure by now most of you know about me, although I have not taught any classes in first year, and I will be teaching only subjects which are from the third semester onwards, third semester, fourth semester. So you will see a lot of me. Uh, but uh, but can you hear me?
Mute yourself. Papa, mute yourself.
Can you hear me? Am I audible?
Yes, sir. Yes, sir.
Yes, sir.
Yes, sir.
Yeah. Okay. So I am a well-wisher of the Finance Club, and I wish you all the best in many ways. See, just to inform Mr. Saha, our Finance Club is organized in four groups. One group is into organizing basically talks like this in which you are participating. Talks. Then another group is focused on conferences and seminars which are of longer duration, maybe 2 days, 3 days events. And then there's a third category of a group within the Finance Club which looks into things like competitions, quizzes, and so on. And finally, there's a fourth wing which has not yet which is yet to start off because of various reasons, immediate reasons, and that is, a kind of a financial newsletter in which every fortnight we expect to bring out some headlines information about the financial world for circulation within not only the finance department and at the MBA department, but also we can extend it to the other departments in IEM. So those things we are trying to do in order to, make our students conceptually ready for the, real world as and when they step into their respective companies and organizations. Having said that, I wish the club and today's event all success, and I will request the host to please introduce Mr. Saha to the rest of the participants, because they would not have known about him otherwise. So please introduce Mr. Saha to the participants. Thank you.
Thank you so much, sir. Now I would request Anamika to give a brief introduction about our speaker, Dr. Odinam Shah sir. Over to you, Anamika.
Thank you, Suman. Thank you for the great address. Now we have Dr. Anindam Saha with us, who will be sharing his great knowledge. I am so pleased to have a chance to introduce our guest speaker. Dr. Saha is currently the Managing Director of Vista Intelligence Private Limited. In a career spanning 21 years, he has worked in various sectors including steel, textile, chamber of commerce, commodity exchange, stock exchanges, data and analytics, and media. Before Vista Intelligence, he has worked in organizations like Indian Chamber of Commerce, FIEO, that is Ministry of Commerce and Industry, the Economic Times, MCX, BSE, NSE, and TICA. He has performed roles in energy management, business development, strategy, general management, and communications. He has studied economics, statistics, and management from the University of Calcutta, Indian Statistical Institute, and IISWM. Dr. Shah is a PhD from XLRI, Jamshedpur. Now I will request Dr. Shah to go with his lecture. The mic is all yours, sir.
Okay. Thank you very much, ma'am. I think I'm audible to all of you.
Yes, sir.
Yeah, very good evening, and I must thank Professor Pradipta Banerjee profusely for having me here. And I wish the university, the students, the faculty is very best. I know you all are passing through difficult times due to pandemic, but these too will pass, as the saying goes. And I also believe, and I'm very optimistic that brighter days are ahead of us, and we will all live through this time. Now coming to the topic of the day, market is very fascinating. And just for my understanding, I guess most of you are in first year and moving to second year, if I'm not wrong, right? Uh,
Yes.
yeah. So I'll keep it very, very simple so that you understand what is financial markets. It is not easy to understand. I joined financial market 15 years back after having spent 5 years in different organizations. So, or 17 years back. And when I landed there, I thought, where have I come? I can commodity be sold on piece of paper without delivery and other things. It was a commodity exchange where I began my career, and then share trading and other things were out of reach because I didn't have enough pocket money to deploy. So all these things became very difficult in my initial days, but with time, obviously, as everybody learns, I was on the learning curve and picked it up and moved on from there. So just before I begin this, I have two PPTs. I was expecting perhaps fourth year students or so. So I'll not touch that PPT, which is heavy on theory side. I will keep it simpler and we'll talk on indicators, what moves the market and what has moved the market, because the topic of the day is why the stock price is rising and why it is at the such a high level, etc., etc. So before I touch my PPT, the simpler version, so that you can all catch up and become interested in the topic, I just add 2 3 lines. What is the structure of the Indian financial market, so that you become bit familiar with it. So it's, I always believe it's a 4-layer structure. On top, you have Ministry of Finance and government agencies like Reserve Bank of India, Central Bank of India. Second tier, you have the regulator. A few years back, there used to be 3 regulators. Now we have only 2 regulators. One is SEBI, another is CERC, that is the electricity market regulator. RBI is a regulator, but RBI is also a policy maker or policy deployment agency or a central agency of the government. Third layer is basically people who are taking the exchange products to the market. So these layer is called intermediaries, or I call them broker in common terms. Fourth layer is basically people like you and me who have some market, fortunately, and want to invest the market with, quote unquote, we have a lot of greed, we want to multiply the money, and we want to enjoy something more than the fixed deposit offers to us. So this is the general structure of the market in a very in a nutshell. Now, of course, there are in the product side, if I talk, the product side again can be broken into 3 things. One is that you buy stocks, commodities as it is, like you go to market, you pick up vegetables, fish, you go to a company, buy their shares, etc. So those things are traded. Other is in your derivatives. So I make a contract, so people may not have enough money to buy, let's say, 1 kg of gold. So I make a contract which is, let's say, 10 gram of gold, and that possibly you can afford, but still it is maybe very heavy for a student. So what I do, I create a derivative whereby you are only asked to pay a fraction of the value of the contract. So 10 gram of gold, maybe let's say 50,000 rupees. So I say that you put 10% of it and you start trading or speculating on the gold price. So you fork out 5,000 instead of 50,000 and you start speculating on the gold price. So this is, simply put, is the leading to derivative concept. Fourth is index. So I want to buy Reliance, I want to buy Tata Motors, I want to buy TCS, Wipro, anything of the world. So I create a basket and break the basket into small pieces so that every component of the basket is represented in that small pieces. So index is a collection of all such companies in a fixed proportion, and I form a tradable instrument out of it. So these are the 4 things which are traded in the market, and we will talk today Why index or the market? Index is a representative of markets because it represents a lot of stocks from the market which are either high liquidity, high market, I would say market capital, etc., etc. It has those characteristics. So we'll talk markets today, why it is at the high level. So when I talk markets, I'll restrict to only stock market, not commodity market, bond market, or currency market. Because the time is a constraint. So now moving on, while I talk to you about the stock market, I'll talk about the benchmark index and the most liquid index in the market, which is your Nifty 50. Now I'll go to the PPT, and the PPT is layered in a way so that this smaller PPT is layered in a way so that you all can catch up. It shows from where the market is going up means a lot of buying is happening. Market remaining flat means either buying or selling are happening in equal proportion or nobody is trading. So that is the concept of market is at a flat level. Market going down means a lot of sellers are in the market and they are very active and selling more than the buyers are pumping in. So the current scenario is such that market is unidirectional almost and is going up continuously. But what is fueling the market? To analyze this, there are two ways. One way is that you analyze it only by looking at the price, because when you go to market to buy, let's say fish, you quote a price, and your perception of price that you quote based on a lot of things like supply, like storage in your home freezer, or let's say how many non-veg people you have at home. Lot of factors influence your quote that at which you want to buy fish. Likewise, when you buy stocks or for that matter index, there are a lot of factors that influence markets. One is that the fish price itself will tell. So fish price, instead of 300 rupees a kg, if it is 3000 rupees a kg, you know that something is must have drastically changed. So price has spiked for 10 times. Likewise, if the stock price has gone up from rupees 1 to 5 times, let's say, then two things can happen. Or you can do two things. You can analyze the historical price, or you can talk to people, read journals, read newspapers, and find out what has changed fundamentally. I will concentrate on the fundamental side of the story. What have changed in India so that the market, or because of that, the market has moved up so much. I'll concentrate on that part. So let's begin. But before I begin, one small request, because I would like to, I can't see anybody. I'm as if I'm talking to a black screen. When I end the PPT, I'd like to see you in a live video so that I can take a snapshot post my presentation, and when you talk to each other for question and answer session. I'll keep it simple as I promised, and there are not much slide in my short presentation, which is this. Why stock market is rising? Let me share my screen, just a second. Excuse me for my voice because I got cold in Bombay. It's raining continuously for past few hours or days. I guess you can see my screen, right?
Yes, sir.
Yes, sir.
Yes, sir. So occasional cough and other things, you have to excuse me. So now, this is the smaller presentation with just about 15 slides. Let me put it down so that you can see the screen. So as you know, why stock market is rising is the simple topic, and if anybody knows the answer, that person must be God. I am nowhere to it, because knowing the answer means you know how to make money and error free, and that is perhaps in my judgment is a utopian task. So I am saying with and it's a very strong disclaimer, nobody knows why stock market is rising, but people try to apprehend it, why stock market rise or falls. My judgment from the fundamental side, as I said, that price analytics I won't cover. That's basically big data analytics, which my team at Vista Intelligence are doing. I will restrict to only fundamental side of the story so that you understand that from tomorrow onwards, mind my words, from tomorrow onwards, if you have to invest, what are the things you can watch out for, be it on the newspaper or be it on website or wherever or in Twitter or somewhere. So here it goes. I have tried to see, because I don't invest in market as a matter of fact, I tried to see how the index has performed in the last few years or so. If you look at 1 year data movement, which is the first portion on the left, the first block on the left, you see that index has risen 57%. So 1 year Nifty has traveled from around 10,000 here. You can see my cursor possibly, and it has moved to where it is today. So this snapshot is dated today around 12 noon. I have taken this snapshot. So around 15,700 or wherever it was, it is at 57% higher level as compared to a year back. 3-year data, 115%. And there was a fall, quite a steep fall, that was due to COVID breakout, and market has jumped again, and 115% jump market has given. So 5-year data, let's introspect. We see a 90% rise. So somebody who has held his investment good intact 5 years, so the person must have got 90% return. So this is more or less the story, and I think 1 to 5 year is a good time horizon to understand whether the market has risen, remained flat, or has fallen. Given that the topic of the day, which is this, why stock market is rising, actually is justified. Now let's get into only 2 or 3 questions, and I'll try to show you what are the factors that you must watch out if you want to have a successful career in finance and you want to invest successfully in finance, which I again put this way, it is very, very risky. Without knowledge, you must not invest a single paisa. So if stock market is rising, that means somebody is continuously buying. And when continuous buying happens, from our common sense, we know the underlying price goes not bound. We go to a market and all of us chase, let's say, mask, sanitizer, everything, and you will see rise in price of those things. Unless, of course, there is enough production to support the extra demand. But overnight, if a lot of people assemble in a shop, and the shopkeeper will be smart enough to hike the price to satisfy the demand or to dispel some of the demand. That's the general economy, demand supply law. That's how it plays out. Now, next, look at this statement. So my presentation will be mostly infographics, except this slide. This slide says few things which is already in public domain. GDP forecast in real GDP, that is basically meaning that I am measuring my GDP in terms of rupee value presented in 2011-12, 10 years back almost. GDP forecast for the current financial year, government has declared about few days back, I think 7 days back, 31st May possibly, there will be a minus 7.3% dip as compared to the last year. Whereas last year we witnessed a 4% plus jump compared to that previous year. So that is how it is projected. 7.3% dip we are predicting for the real GDP. Mind it, I am talking about real GDP, not nominal or current GDP, current price GDP. Second paragraph is about current price GDP. Now, if the first paragraph says there is no money because market is shrinking, economy is shrinking. Now because newspaper tries to sensitize or make negative headlines, so they have only highlighted this story. There is minus 7.3% negative growth in GDP. You have possibly not seen that they are talking about real GDP, which is in terms of 2011-2012 or 2010-2011 money. I'm not sure. Check it out. When last the base year was set. But nominal GDP, if you look at it, it is hardly 3% change if I'm talking about current price comparison with last year GDP size. What is GDP? Is a gross domestic product. That is the, in very short, that is the sum of all services and products in the economy. Third portion is very interesting, which is colored. It is saying at the Q4, now I am coming to a micro level. At Q4, which is January 2021 to current month, March 21, during this time, actually there is a 1.6% positive change in GDP. If I only consider these 3 months instead of 12 months. So money is coming. So this is the first indicator if you break down the data. So first learning is that if you go to the market, don't just trust one data point. You break it up to the best level possible or to the access you have. Now moving to the infographic parts. So what is it shows? Now I'm moving little away from GDP to gross value added. This is the most modern way of looking, or people have started looking India or country at this data set. So what is gross value added? Gross value added is your GDP plus government provides lots of subsidy to lot of things. People under poverty line, people goods which are essential, government gives subsidies. So GDP plus those subsidies minus tax on products. So subsidies on product is added to GDP and tax on products is taken out because tax goes back to the government. So this is a more realistic way of looking at cash in the market. Reason being, subsidy also comes to the market, not only the GDP. So I have, that's the way of doing things. So subsidy is added to GDP and tax is taken out, and that is GVA, gross value added. If you look at this data, quarter-wise, the last portion on the right on the chart, Q4 financial year 21, which is current, January to March, you see there is a positive uptick. Am I right? You can all perhaps see it here. So there is a positive money flowing here from a journey that was started here, where is a sharp dip, and then there is a little bit of recovery, then complete recovery is almost 0-0, and then there is a prominently upward seeking bars rising or surfacing. Now come to the table below. I am talking to you to make you understand why the market is rising, and market rising means, please keep it in mind, lot of money must be in the market available. So this is the story unfolding before you. Q4 financial year 21, if you look at this data alone, both GDP and GVA, both are positive, right? So which is highlighted in yellow. Now, gross value added, you understood there is a large amount of money which is in the market. Now, it is up to people to utilize in, to put it in saving or to take the money out for doing something entrepreneurial journey, or to put in markets. And I'm sure people must also be putting in the markets. We'll see it in next few slides. So when you try to invest in the market, please look at this data before you begin a serious investment career. Now, look at this data. So India market, share market does not only mean that you and me alone invest. It also means a lot of foreigners invest in the market, either through share market, which is run at NSE, BSE, MCX, elsewhere, or through funding through some new projects. Like I have started a company, some foreigners have given me seed funds, etc., etc. What is the money that has come from FII? Look at this graph carefully. So the blue bars are representing money that has gone into the equity market. Equity means share market. And the orange bars represent the money that has gone into the debt market. Debt means the government takes money, loan from people through papers issued by the government, primary papers, bond, etc. And this money government spends on infrastructure, subsidy, unplanned expenditure, planned expenditure, and whatnot, defense budget, health budget, etc. Sorry. Yeah, I got some sound, so maybe somebody was talking. Okay, so this money comes to market any which way. So the equity money that FI have invested in has become, so November 20, October 20 onwards, it is all positive graphs, except for April, when possibly due to year end or whatever reasons, they must have done a little bit of profit booking. So they have invested, market has gone up and they book their profit, must have been the case, or whatever may be the reason, or US have got some good investment revenue, so have taken the money out, etc., etc. But now again, in May, which is just concluded, again the money is coming back. So this is a lovely story as far as India is concerned. Throughout, if you see, the most of the blue bars are on the positive side, above zero line, right? Zero horizontal line. So equity market is getting a lot of money from foreign investors. And it's a fact that NSDL data, which preserves this data, NSDL, CDSL are depository services. They said that FI net investment in the current financial year also expected to be positive. I also tell you this fact that why debt market investment are relatively lower. Reason being, government has reduced interest rates, right? We are in a low interest rate regime. So government takes money from you, but may not pay you the interest rate that you may be interested in. You may be interested at 10%, but government is willing to give 6%, 5%, 7%, etc. Therefore, attraction for government primary papers bond is much lower, and therefore investment happen in those papers or bond is much lower as compared to the equity instruments by foreign investors. And I have mentioned two numbers here, bottom row. The investment during January 20 last year to May 21, during these 16, 17 months or so, total net positive investment in equity is a whopping 2,16,608 crores. Whereas this bond market, debt market has seen half of it, 1,13,000 crore or whatever. So this is the data as far as foreign investment concerned. This also justifies, I'll repeat this statement, current rise in the market represented by Nifty. Now next, international trade. Why this is important and you should watch out for. International trade means either I can export or I am importing. Importing means I am bringing some goods inside the country or services inside the country, and therefore I am paying out to foreigners. So my money is going out. Export means I am sending some goods or services outside, and therefore I am receiving payments in lieu of the services and goods sent outside, shipped outside or air traveled outside or whatever. Now, there is an interesting trend, and the gap between import value minus export value is called trade deficit, trade balance, and all these things. So usually India has more imports than exports because we import a lot of crude oil to satisfy our petrol demand, gasoline, air fuel, kerosene, all these requirements. Now look at these bars for 3 years, starting just concluded financial year to 2 previous years. It says that, very interestingly, 2021, the gap between import and export is falling short. That means we are sending out, I mean, we are receiving more money relative to giving more money. The gap is almost neck to neck in 2021. If you look at the bar, horizontal bars on top of the bar chart, right? Whereas in the previous 2 years, 2018-19 and 2019-20, import by far outstripped the export. So if that be so, that means we have less to worry about making payments to foreigners. We may not require that much of money or may not be that solvent to pay out to foreigners. So foreign currency requirement is also will be lesser. And once you have enough foreign exchange reserves, that means you are becoming richer globally because your dollar reserve is increasing, and I believe that is at historical high, around $5 billion or something. Check that out. What is the foreign exchange reserve that India has now? I think it is at historical high now. So this gap is reducing. That means we have less money to pay to foreigners, and therefore we have more money available domestically. What do you do with that money? Perhaps you invest in capital markets through domestic institutions or some other money. You set up new businesses here, you give more subsidies, etc., etc. Now these two tables, one is at current price, another is 2010-2011 price, base year 2010-2011. I think you must have studied in statistics what is this CLI and all those. So base year concept is known to you. So if you look at this import as a portion of GDP has reduced in current price from around 23.7% in 2018-19 to to 19.2% in the largest concluded financial year. And in real terms also, there is a 3%, not 3%, almost 3% dip from 23.9 to 21.2. So it looks nicer by as the financial year passed by. Next. So people always talk about that lot of price inflation have happened. I used to get a lot of vegetables when I go to market about a year back than I get now. Maybe, but the data says that consumer price index currently is at 6%. If you look at the rightmost curve, I'll explain the left curve later, is around 6% here. And very interestingly, this is a plotting from 1986 to 2020. So CPI is basically year on year. So when I say 6%, that means as compared to last year, current price of the goods covered under consumer price index definition have risen by 6%. So that's the definition. So if that be the case, then you must see here that 6% is below the average trend line that you can perhaps plot here. 6% is well below 8% or 8.5%, etc., etc. And India has witnessed even 10%, 9%, 13% CPI index value. So we are not, subjected to very harsh treatment by steep prices of goods that we want to buy. Now, market looks at two things: whether everything has become inflation like Zimbabwe, Venezuela, where inflation is very high, and cost of goods in domestic currency, Venezuelan dollar or something they call Zimbabwean dollar, is astronomical. Like one bottle of mineral water may be costing 50,000 rupees or $1 lakh, anything. So inflation in India is within control, not like those countries, hyperinflation and those scenarios are far off. Then people are predicting doomsday and all that. Now, market also wants to know, okay, fine, you are saying that 6%, 4.7%, 3.6%, whatever is the inflation rate now, but what about tomorrow? I don't have good vision about tomorrow. Certain statisticians work this out. I'm not naming the source, but they are saying this is the point where we are standing now, 6.2% currently. The left graph, smaller graph. They are saying that from here it can come down and possibly around 4, 4.5, 4.01, etc. It will settle down. So that is the prediction. Now market looks at things this way, that okay, today is fine, but when I'm pricing, I'm buying something, my expectation is dated tomorrow. I want to be richer tomorrow. So will the economy become dismal, or will the economy continue to perform without giving much pain to the people that it serves? So market thinks that tomorrow the inflation will come down and will be around 4%, and therefore market is on a buying spree. Next slide. This is a concept called gross fixed capital formation. Very simple. Don't get confused by the big jargon and everything. What it means is basically investment. How much investment has happened in a given year? Because investment you can't talk on a day. It's a big concept. It takes time. So 1 year is a sizable time period. Let's talk about it. GFCF, gross fixed capital formation. How much accruals have been made minus the disposals? So I am an industrialist. How much new assets I bought, fixed assets, right? And how much assets I have destroyed, sold out, written off, etc., etc., as bad investment or whatever. So it is a net. So it is equivalent to investment made. If you look at this pie chart, which covers 3 years, and it shows that percentage share of GFC, let's say 100 rupees has been spent in these 3 years, right? So percentage share of that invested in these 3 years on fixed assets. Like somebody has created a power plant, somebody has created a, let's say, garments manufacturing plant, etc., etc. 32% in 2021, 33% in 18-19 when no COVID was there, and when COVID was around 32 and 35%. Not bad, right? So on a range of 32 to 35, this GFCF number usually hovered around. So investments are being made in industry. We may not see it in West Bengal or some of the eastern region states, but come to Bombay or Gujarat, investments are being made in equal number, equal quantity amount That was the case earlier and before COVID. And if you look at this current price, GFCF, this is the share of percentage number. I have taken it from the Ministry of Statistics. It is around 29.2, 28.8, 27.6. All numbers are neck to neck, almost touching each other. So not much change has happened. So people are assured that my investment climate is continuing in the country. Nothing dismal has happened, therefore, and it will continue perhaps in days to or months to or years to come, right? So this is GFCF numbers. Now let's move to having understood the economy at large, GFCF, gross value added, etc., GDP, everything fine. But what about me as an individual who has money or doesn't have money? So the story is this is up to I think 2018-19. I didn't couldn't plot the latest last year because both data was not matching. There was some issue in my data set. So 1 year back when COVID news was just breaking, this is your real GDP, which is the green bars, and per capita income over the years, right? So for about 8 to 9 years or whatever number, for 3, 4, 5, 6, 7, 8 years, both have gone hand in hand. It is not that the GDP has increased, government kept money and people have become poorer. So people income, per capita income has also grown over the years. And I'm talking real money, not your current price, nominal money, right? So people are loaded with money like before, and it has grown in proportion with the country's income, GDP, GNP, whatever you call, or whichever way you want to look at it. Now I give you a small anecdote because we are talking capital market, stock market, etc. So a firm in Kolkata, which is one of the largest, I am not naming it in public forum and I'm getting recorded also. So that firm used to earn 7 lakh brokerage, 8 lakh brokerage a day about a year or 1.5 years back. This is actual data I'm talking. Today, when the pandemic is happening, people are saying nothing is possible, etc. That firm is earning 20 lakh plus a day. So that 3 times jump that firm has witnessed during these last few months or so. I just spoke to them to find out whether they are also seeing jump in investment. And few days back, BSE, Bombay Stock Exchange, has released a data saying that 7 crore investors have unique client code with the exchange, which is not a joke. Now you can say it is only 5% of the 130 crore population of India. That's fine. But you will be surprised to know when I was in NSE about 4 years, 5 years back, or I was in BSE about say 6, 7 years back, etc. Then this 7 crore number used to be hardly 1 crore or etc. Now the number of active UCC is around 7 crores. That's the BSE data. So market has increased and therefore more people are coming. Obviously the greed is something quote unquote that is bringing people, and unfortunately many will go empty hand or ruin things also. That's a reality of market. Only few will earn handsome money. So this is the disposable income case from country to small elements like export import, FII, and now we move to individuals. Now where they put money, that is my next question. Where are we spending? Are we spending on, let's say, giving money to my girlfriend, my boyfriend, or I'm keeping money in the, let's say, quote unquote, Sinduk, so that it doesn't being taken away by robbers? I don't trust banks. What I'm doing with the money? Is my marginal propensity to save is higher or has become higher, or is my marginal propensity to consume has become, MPC concept, you know, you must have studied economics, has become more. So let's see. So this is a graph or infograph which is showing where the money is going. So this is little dated because you need time to collect at a country level from all the people who had people are spending, but nevertheless, let's see, pattern doesn't change overnight. So 27-28% goes in food, non-alcoholic beverage spending. What does it mean if it is going to food? It means that people are buying products from companies like ITC, Britannia, Nestle, and all such names, right? Because they produce FMCG products. Alcohol, beverage, tobacco, narcotics, only 2%. Because of high tax, people have quit smoking, or health reasons, people have understood the flip side of it. So ITC is a producer of this, let's say, cigarette and all those things. Clothing, footwear. If I'm spending on clothing, footwear, then where the money can go? Money can go to companies like Orvin Mills, Grasim, etc. Right? So their revenues are increasing. When I'm taking company name, that means their sales are increasing, their revenues are increasing, and hopefully their profit will also increase minus cost. Right? Housing, water, electricity, gas, other fuels, we spend around 14%. And when we say housing, electricity, etc., what are the companies we name? Asian Paints, Sri Cement, JSW Steel, so on and so forth, infrastructure companies, color companies, etc. When we talk about furnishing, household equipment, routine household maintenance, basically I'm possibly indicating durables, etc. So for example, let's say Godrej, let's say LG, all these companies come into our mind. Health, for example, pharma companies like Sun Pharma, let's say Reddy's Lab, etc., etc. 5% of our spending goes there. Transport, it's interesting. Transport means, I'll show you a slide where I have deciphered it. Transport means two types of एक commercial, दूसरा is private transport. Now, when I talk about private cars and other things, what are the companies comes to your mind? Possibly, let's say Mahindra and Mahindra, Tata Motors, Maruti, etc. Hero, if you are talking about two-wheeler in particular, etc. If you talk about, let's say, commercial vehicles, let's say HR Motor. So many companies which are listed, they are getting money from you, and their revenue side, sales side are rising. Right? And when you talk about hotels, I'm sure if this year's data is published, this will be close to zero. That's the case in the US. It has seen is the most affected center as per the last data published by the US government. It must be zero, right? Move to next. So look at the spending habits of people to understand where they're spending, and that will give you an answer of some companies which are rising and some companies which are not rising, perhaps, right? And beyond this, whatever money you have, this is only spending, right? You don't keep much money at your almirah or under the bed, whatever, the traditional way of keeping money. You put in banks. If you have money, extra money, you put in fixed deposit. So that means stocks like HDFC, ICICI will also go north. Now, next, this is one way of investing in market indirectly. Meaning mutual funds is the talk of the town, people buy it. Let's understand these two graphs very clearly. First, the left-hand side, bigger graph, which has two bars. One is blue, another is orange. Blue bar is basically your equity mutual fund related. How much investment is happening on the equity mutual fund schemes. So if you ask me, a lot of redemptions happened because stock market became very negative, etc. during the COVID period, which was last year, let's say May onwards or June onwards to this year, let's say February also, and then second wave and all these things are happening. But now, as people are getting vaccinated and other things, you see March onwards data, May data also having a positive mutual fund AUM, asset under management. And lot of money, people who are investing in mutual funds, they are also putting into debt funds, debt related mutual funds. This is the data of debt mutual funds. Now, debt mutual funds has to be higher because a lot of government institutions buy government primary paper under quote unquote compulsion or a genuine reason also. Now, this is a data. Now, these blue graphs may be looking smaller footprints to you because the debt, this is a relative graph. I should have put it in different framework. In relative to orange, it may look like a dwarf, but actually it is sizable. Move to the next bar graph chart. This is the inflow that has happened on equity linked funds. Only equity. I have taken, I took it just 10 minutes back before I started here. April 2022, March 21. Look at the last 4 months here, January to March. These graphs are spiking as compared to the average from April 20 to November 20. These last 4 months are seeing lot of money pumped into the equity mutual funds. Now, you may ask that what does it mean to me? So if equally mutual funds investment are rising, that means the fund manager of those equity mutual funds are buying stocks which are underlying to those mutual funds. If you have understood mutual funds little bit, then a mutual funds consist of lot of stocks, a particular mutual funds. Let's say HDFC blue chip. It could have HDFC stock, ICICI Bank stock, State Bank of India stock, etc. Now the fund manager is bound to put your money or money collected from investors, SIP or direct lump sum investment into the market, and they have to buy those stocks. And that means the stock price will rise because demand is coming. So therefore, these 4 months, which has surprised me also when I got to the next level data, these 4 months are witnessing lot of inflow in equity funds. Move to the next. I'm more or less coming to an end. So prepare your question if you have any to ask. What is the time now? Just a second. 7:21. Okay, so within time. So last 2 slides perhaps. So lot of indices are being spoken in the market. I just highlight some key indices so that you can again understand why market is rising. Ask this question and again and get back to your data sets to understand from where the money is coming. WPI food wholesale price index. WPI means wholesale price index of food. As compared to last year, which was seen 7.8% rise, which is negative to us because we have to spend almost 7.8% more to buy the same food that we used to bought by 1 year back. This is Q4 data. I've taken only small segments so that it is close to reality, not 1 year data. So 3 months, right? So Q4, which is current financial year, 2020-21, this has last financial year, that means January 21 to March 21, WPI food index is only 0.7. So as compared to last year January to March, this year January to March, you are spending about, let's say, 0.7% higher on the food items. This is the meaning of this graph. So you are not losing money on unnecessary spending. You have the money to directly invest in the market. Even if you are spending on food, then also this money goes to some companies, their profitability will rise, etc., etc. But here, in this case, WPI food index, when it is flat or 0.7, etc., etc., that means the money is with you. And look at the WPI manufacturing. This is a reverse concept. Here, WPI food means less index value means it is happier scenario. Here, less index value means it's a doomsday scenario, meaning no production, no manufacturing is happening, factories are shut, etc., etc. So here you can see 6.3% is the WPI index value as compared to 0.5 during Q4 2019-20 last year, January to March. Now look at the industrial production, which dipped to minus 6.3%. Now it has revived to 5.8%. So these are stories that here first set is saying that you have money. Third set is saying that your manufacturing has taken up and manufacturing demands are coming. Therefore, manufacturing goods prices are rising. If demands comes only, then price rise. And this is also supported by IIP, industrial production data, which is saying that production is rising in India. Last two, again coming to the micro level, from macro up layer to micro level at your level and my level. So commercial vehicle sales, which is like, for example, truck, payloader, all these JCB machines, etc., which was almost minus 50% down last quarter, last year for Q4, to January to March last year. This year, January to March, that sector has revived to 43.2%. It means that companies which are producing those things like Tata Motors, etc., trucks and other heavy vehicles are having a field day. So they are making more, and they are not fools. They will just make and keep building inventory. They are making it because there is a demand in the market. Private car vehicle sales. Last year, all of us were surprised to figure out, possibly in April or maybe May, I forgot, Maruti did not sell a single unit, be it Alto, be it other models, anything, SX4 or whatever, Baleno. They could not sell a single unit of their production last year, April, possibly. Check this out. So entire car industry was like a without any oxygen. So minus 24% growth. This year it is back to almost normal, or is rising at least 27.1% plus. So all these car industry stocks are must be going up, etc. Now, why stock market is rising? The third and last fabulous stories unfolding before you. To me, this is the story that monsoon forecasts are normal. Why it is, what is the trigger or